PayPal stock is up more than 200% since it was spun out of eBay in 2017. But this stock has been hammered recently after reported disappointing fourth quarter results. Is right now a good time to pick up a couple of shares? Let's run this company through our investing frameworks to find out. My name is Brian Feroldi. Thanks to StockCard.io for sponsoring today's video. So PayPal is a $144 billion market cap company that trades under the ticker symbol PYPL. The company's mission statement is to democratize financial services, to help improve the financial health of individuals, and to increase economic opportunity for entrepreneurs and businesses of all sizes around the world. While that's a mouthful, I do like the mission statement. I think it could be vastly simplified though. So what does PayPal do? PayPal is an electronic payments company that connects merchants and consumers together. PayPal has built out a portfolio of products, including its namesake PayPal Business, but also businesses such as Venmo, Zoom, and even Honey. PayPal has more than 426 million accounts as of the end of 2021, and its services provide a range of financial solutions. You can use PayPal to do peer-to-peer payments. You can add it to your website to do checkout. They do payment processing, in-person payments, and they even provide marketing tools for businesses through the company's Honey acquisition. How does PayPal turn that into revenue? In a couple different ways. The primary ways are payment transaction fees, foreign currency conversion fees, instant transfer fees, interest fees, and other value-added service fees. Impressively, the number of active accounts on PayPal's platform have continually grown over the years, as have the number of payment transactions. And in 2021, the company processed more than $1.2 trillion in total payment volume. Now, given the company's size and maturity, its customer acquisition costs have been driven down over time, and today they are quite low. The demand for payment solution products such as PayPal offers do tend to be recession resistant. That's especially true considering this company is continually capturing market share. Longer term, it is likely that the company's revenue could become more cyclical as it continues to mature. And on the positive side, nearly all of the company's revenue is recurring in nature. The number one moat protecting PayPal is the network effect. Merchants naturally want to accept payments on platforms that have the most users and vice versa. Given PayPal's extreme size, long history, and dominance, we think that the network effect is very strong for PayPal. Also think that PayPal benefits from switching costs. Once a merchant gets up and running with PayPal software, and once a consumer downloads and starts using the app, it can become a little bit onerous to switch away and use something else. There's also an argument to be made that PayPal's brand name has become extremely strong, having existed for more than 2 decades now, and the name PayPal has become synonymous with online payments. And while there's no doubt that competition in the space is heating up, I think there's an argument to be made that the company's moat is still expanding to this day. Taking a look at PayPal's financial statements, they are, in a word, fantastic. Revenue growth has been strong for many years and clocked in at more than $25 billion in 2021. Gross margin clocked in at nearly 60% for the fourth quarter, although this number does bounce around depending on how you calculate it. And just as impressive is the company generates huge amounts of both net income and free cash flow, both numbers clocking in at more than $5.4 billion in 2021. The company's balance sheet is in good shape with more cash than debt, and the company boasts more than $9.5 billion in cash on its books. And given that the company is profitable, its returns on capital are medium to medium high. PayPal was founded by Peter Thiel, Max Levchin, and Ken Houserle. You can also add Elon Musk to that list if you'd like, but none of them are involved with the business day-to-day operations anymore. Instead, PayPal is headed up by Dan Schulman, who has been in the corner office for 8 years now. Schulman and PayPal get glowing reviews on Glassdoor. On the downside, inside ownership here is very, very low, less than 0.1%. Turning to optionality, does PayPal have any? I think the answer there is yes. Not only is the entire fintech sector growing, and not only does the company have tailwinds such as home delivery, e-commerce, and even digital wallets going for it, but the company is experimenting with things like cryptocurrencies, which could be a long-term tailwind for the business. As for operating leverage, there isn't likely to be that much left. The company is already putting up net margins over 20%, so it's hard for me to see them moving meaningfully higher over time. And this might sound unbelievable, but PayPal's total addressable market opportunity has estimated to be over $180 to $185 trillion, of which the company has captured less than 1% of its market. And while the company is certainly not shy about pulling the trigger on acquisitions, the majority of the company's revenue does come from organic channels. Turning to the stock performance, while the company has been under huge selling pressure recently, it has still outperformed the market both since IPO and over the last 5 years. And it does tend to have a history of exceeding Wall Street's estimates, although it did miss when it most recently reported. As for capital returns, the company does spend a large amount of capital on buybacks. It does pay back a little bit of debt each year, and as of the time of this recording, it has not yet initiated a dividend. Turning to competition, that is the number one risk for investors to watch. The company faces direct competition from the likes of Stripe, Square, Adyen, to say nothing of the hundreds of other fintech upstarts, as well as from big tech companies such as Apple, Amazon, and Google. So competition is a major thing for investors to watch. Another long-term risk is disruption from cryptocurrencies. While management believes that cryptocurrencies are a tailwind for right now, there's no doubt that longer term that could prove to be a headwind. And finally, with the stock selling off so hugely over the last couple of months, valuation for the company is still higher than the average company in the S&P 500. However, shares are not nearly as expensive as they were, and the valuation risk is not huge today, given how much shares have fallen. So what should investors watch moving forward? First and foremost, keep an eye on that total payment volume. We want that number to continue to move up and to the right. Second, keep an eye on users, both users and merchants. We want to see the number of people using PayPal's platform continue to grow. And third, keep an eye out for optionality. The company believes that crypto could be a huge tailwind for the business, so we want to see the company executing against that opportunity. So how did this company score in our investing checklists? For me, this company got a 78. It used to be in my high quality business category. I did recently deduct a few points, but overall, I still think this company is highly investable. On Brian Stoffel's framework, we give this company a 9. That puts it squarely in the robust category. Time to hold ourselves accountable. So I'm going to head on over to stockcard.io, and I'm going to go to the anti-fragile portfolio. I'm going to click new order, type in the ticker, which is PYPL. We're going to be doing a buy decision, recording this on Wednesday, February 9th. Shares are $123 each, so we're going to buy about 9 of them, and they received a score of 9 on Brian's investing framework. Next, I'm going to head over to my thumbs up portfolio, which is the Brian Feroldi quality checklist, and I'm also going to place the same order. So that's ticker symbol PYPL. We're going to do a buy decision. Today's date is Wednesday, February 9th. I'm also going to buy 9 shares, and the score for me was 78. Overall, I happen to think that PayPal is a fantastic business that is currently trading at a very attractive valuation. And while I currently own shares, I could easily see myself adding to this company in the not too distant future. Brian, out!